So the stock market versus the crypto market. People know that the stock market's less risky, it's less volatile. When you get a move in the stock market over the course of the year, you can often get 5, 6, 7% if you're lucky on the stock market. What about the crypto market, guys? You often get 10% within an hour. So crypto's more speculative, it's more volatile. I love volatility because the more volatility, the more gains. But you have to be more careful because the more gains that you get, the potential, the more losses that you're going to get. So is it better to buy MicroStrategy or is it better to buy Bitcoin? We're going to look at both charts very shortly, but I'm going to dive straight into Forecaster. This is the new app, guys. I'm going to be showing you a lot more about Forecaster. If you do think that this could help you within any of your analysis, I've got a link in the description below, which gives you a 10% discount. So you get 10% discount on Forecaster. What does Forecaster do? Let's go a little bit through the process. What we're looking at is MicroStrategy. So MSTR, MicroStrategy Incorporated. We can click that. Then we're going to get some analysis on MicroStrategy. So this is the overview. We're going to look at the bad and we're going to look at the good. So this is the overview, and you can see one thing. You've got net income here, where you've got net income, which is coming down, and then you've got the price going up. What would be positive here is if the net income was going up and then the price was down. That would show that it's undervalued, and you've got the income coming in and you've got the sales coming in. So if you look at the sales, that's even worse than the net income. Sales is even further down here. So you've got a negative correlation from the sales to the price. That's pretty negative, and that's probably going to show that MicroStrategy is actually overvalued at the moment. So if something's overvalued, why do you want to buy something that's overvalued? You want to buy it when it's undervalued. You don't go to shop and buy a product and then go and buy exactly the same product for a higher price. You want to be buying it for a lower price when it's undervalued, guys. You want to be doing Black Friday in the stock market. So the next thing, this is a clever tool, guys. This is the seasonality. What we're going to look at, this is the 3-year and the 5-year seasonality for MicroStrategy. We're going to add some extra years on there. We're going to add last year on there. We're going to add 7 years. We're going to add 10 years, and we're going to add 15 years. What we're going to do is look for correlations. And you can see when you average these out over these periods, the charts look similar. So what that tells you is there's a high correlation. Other than the 3-year, we've got a high correlation over 82. For the 1 year, for the 5-year, 81, for the 7-year, 77, for the 10-year, 83. So that's showing a real strong correlation. And when you've got a correlation, you can look at what is expected to happen going forward. So we're here now at the moment, around the 10th, 13th of January. We're at the 13th or the 14th of January. What happens historically is we get a little bit of a dip off, then you get a pump. So this, around about the 27th of January, over the last 1, 3, 5, 7, and 10 years combined, is where the bottom is for MicroStrategy, and that's where the surge is expected. So that's showing potentially we could get some kind of a pullback over the next few weeks and potentially better offers. So the next thing I'm going to do is the current price, and we're going to look at the current price and see how that's correlated against the rest of it. So although it's not following this trend, guys, don't forget this is just 1-year data. So price is higher and it's gone up as the rest of the correlations have gone up. It's gone up higher up here, then it started pulling back. Now look what happens at the correlations here. It's pulling back, it's pulling back, it's pulling back, and it's nearing the bottom end between the 27th and the 22nd. So we talk about the 22nd on Bitcoin. The Bitcoin seasonality bottoms on the 27th over the last, I think it was 1, 3, 5, 7, and 10 years. So it's going to be an important day within the crypto market between the 20th and the 22nd. Obviously, Trump's getting elected on the 20th. What positive practices is he going to put out? What stimulus packages is he going to promise? And what new crypto policies and what new regulations are going to be implemented? So you can see it is correlating, although it's right up here, it is correlating and it's pulling back as the rest of the correlations are pulling back. So strong correlation there. Expect that to pull back slightly going into the 20th to 22nd, and then potentially you'll see some upside from that. Okay, next thing, overbought or oversold. Is it overbought or is it oversold? You can look at the advanced DPO here, and that's telling you green is a strong buy. This was a strong buy back down here. Now we're on blue. So anybody that bought the strong buy is holding now still. It's expecting potential upside. However, it's signaling it's not a strong buy. Orange is sell and red is a strong sell. And you can see here, as it starts getting orange, things start to cool off, it gets red, and then it's a pullback. So that's the Wyckoff effect. Right, the fundamentals next. We'll bring the fundamentals, and this is why this is cool, because it brings fundamentals and it brings technicals and it brings millions of pieces of data into one place. So it's basically saying next earnings are due 4th of the 2nd. And then you come down here and you can see that the average fair value is 140.52. So we looked at the previous analysis. We looked at MicroStrategy looked like it was overvalued. Current price is 342.17. It's 58.93% overvalued. So would you be buying something that's 58.93%, guys? Don't think of this as just a stock, guys. Think of it as an object that you potentially go into a shop. You go into a shop, the first thing that you do is look for something which is a bargain. You want that thing that's cheaper. You would never ever go and look for that same product that's 58.93% higher. You would never do that. Then you come down, you can look at the Altman Z-score. The Altman Z-score shows the security, whether it's potentially going to go bankrupt, whether it's going through hardships. It's got a strong score here, 8.86, which is a low risk of bankruptcy. See, these fundamentals are a strong thing. You've got all sorts of different data coming down here, guys. We're going to be going into more depth into this data. The next thing that I want to show you is the forecast AI agent. So they've built an AI agent into there, and you can look at all these different things. Financial statements, what's happening, what their competitors are. It's a good thing to check competitors, guys, because if something's 58% overvalued and then there's positive sentiment within one of their competition, for instance, could be 58% undervalued, then it makes more sense to look at the one that's undervalued if they've got positive narrative going forward. All sorts, suppliers, clients, future prospects, buy or sell. So you click on buy or sell and it gives you all this information. So market cap's approximately 77.4 billion. This is the recent prices of yesterday. Average fair value is 140.52. Goes through and it analyzes from a fundamental perspective, brings all this data into one, guys. So that's MicroStrategy. We know from looking at that data, we're bringing the fundamentals, bringing the analysis into one point, that MicroStrategy is overvalued at the moment. Doesn't mean that the price can't go up, but it means that it's overvalued. Price can go up, guys, and then it can come down a lot harder. So it can go up 20% and go up 30%, and it can come down a lot harder. So let's look at the charts now, guys. We're going to look at the MicroStrategy chart first. And when you look at the MicroStrategy chart, you can see that it pumps when Bitcoin pumps. Why is that? Because MicroStrategy just holds an absolute shit ton of Bitcoin. So they call it Bitcoin on leverage, guys. And this is why they call it Bitcoin on leverage. If we measure just this swing here, from this swing here, and this is a stock, guys, that's 433.66% to the upside. Now we've got Bitcoin here, and we're going to measure exactly the same swing. And that swing on Bitcoin is 120.84%. So is that saying that you're getting a 4x on MicroStrategy that's better? You're overvalued, you're 60%, nearly 58 to 60% overvalued. You know that the swing on MicroStrategy was such a volatile swing that it was nearly 4 times higher than what the Bitcoin swing is, which shows that that's over leveraged. For a stock, that is really over leveraged. MicroStrategy, guys, hats off to Michael Saylor. I think he's an ambassador within the space. We've got a lot of respect for the guys. However, when I'm just looking from a technical perspective and bringing in the fundamentals, I'm looking that Bitcoin looks a lot safer. And I think that Bitcoin is probably the safer bet as far as I'm concerned. So that's just the analysis between the two. You've got the volatility and you've got the risk of having a crypto exchange. That's why you need to do your due diligence, find out that the crypto exchange complies with your local regulations. If it complies with your local regulations, a lot of the time they're not allowed to hold, or they have to hold client funds separate to what they hold their own assets for, or the assets they're using for trading. So that's the key, guys. They've got to jump through loads of hoops to get approved by your local regulator, as is the FCA. So I use an FCA exchange, and I don't put all my eggs in one basket, guys. And if you've got all of your eggs in one exchange, you think to yourself, what happens if that exchange fails? You lose everything. That's what happens, guys. So make sure you have an even spread. Make sure you do your due diligence on the exchange. Where is it from? Have they got a strong team? How do they manage your assets? Do they hold client funds in a separate account? And that's the main thing. Have they got any insurance policies that in the event that something gets hacked, you're going to pay out, you're going to be safe? Make sure you do your due diligence, because there's so many crypto exchanges out there that haven't got that kind of background safety measures in place. Okay, guys, so as far as that's concerned, actually, let's have a quick look at what else Forecaster does. So that's MicroStrategy. It's got a lot of cool things built into this. What we'll do is we'll go up here. These are the different things that Forecaster can do. You've got your favorites on there, you've got your calendar on there. So the next thing is the COT report. These are all valuable things, guys. I'm not going to go into them in too much detail, but you can look at the COT report. And this is split up between different categories. You've got currency, you've got agriculture, you've got metals, you've got stock indices, you've got petroleums and products, you've got treasuries and rates, natural gas and productions. Now, anybody that hasn't watched this channel before, they know what my exit strategy is. I'm scaling out of the crypto market, and I'm going to be scaling into different markets, what I think is going to be low in supply but high in demand in the next 9 to 12 months. I expect crypto to crash in the next 9 to 12 months. Potentially we're going to have a mid-market crash, but I really expect the markets to crash in the next 9 to 12 months. So because of that, I'm going to be looking at assets that I think are going to be scarce during another run. So we're going to be scaling out of the crypto bull run, and then we're going to be going into a new bull run. When crypto pulls back, we're expecting to capitalize on that into a new bull run, i.e. last time it was natural gas, last time it was wheat. A lot of commodities actually ran when crypto was pulling back. So what I'm saying is a well-diversified portfolio. It's all well and good having one within crypto, but think in the next 12 months, think in the next 2 years. You hold your crypto bags, and promise you now, guys, you're going to get hit hard. So you should be looking at other assets that are not outside, that are outside of crypto. I mean, it's all right. Bitcoin's always going to be a part of my portfolio, guys. But as far as altcoins are concerned, I'm expecting most of the altcoins to drop 70, 80, 90. Some of them 98%, some of them 99%, some of them go to zero. So just think about it, guys. Don't marry your coins. Promise me that. Don't marry your coins. If you think that you're going to be doing 3-year, 4-year, 5-year holds, this channel's probably not for you guys, because I'm expecting to capitalize out of this bull run. I'm expecting to be taking profits out of this bull run, and I'm not speculating on something lasting for 4, 5, 10 years other than Bitcoin. So what I'm saying is have an even spread between all of these things here. What is it that's going to be running when the crypto market pulls back, when the rest of the stock market looks bleak, when the dollar starts taking over and people start buying into the dollar because that's the least risk asset within bad times? Then you need to be looking at even having an even spread. So that's the COT reports. You've got rankings here. We need to be going a lot deeper into this, and we will be going a lot deeper into it very soon. So you've got the rankings here. One thing that I want to look at actually, guys, is the S&P. So we look at the S&P, and this is quite a cool thing to do. One thing that you can see overall, this is how the S&P is split. You've got 15.71 in tech, 14.51% in industrials, financial services 13.52. Now think about this, guys, as your portfolio spread as well. You're going to have a pie chart, and you might have technology 15%, you might have industrials, but then outside of that, you're going to be having commodities like gold, silver. You're going to be having things like wheat, like grain, like natural gas. All of these things are going to offset the things that are pulling back in a bad time, and they're going to be running in a good time. So that's the importance of having an even spread. When you look going into 2025, you can see that the S&P as a whole is undervalued by 2.76%. So it's not a huge amount, undervalued by 2.76%. And we can look down here at what the S&P is made up of. One thing that we can do is we can filter it out by things like market cap. There's the market cap. What's the price? What's fair value? Now, this is the important one. What is fair value? So you click fair value in the highest thing here, global payments. You click on that. End here. You click on that. And then that brings up the data, and it brings up the stats. Because remember, guys, the S&P is made up of all of these different things. So we can filter out and we can find out what's undervalued, what's overvalued at any given time, how long is it expected to run for, when's the time to take profits, when are the politicians taking profits. We're going to look at that next. So here's the stats, here's the fundamentals, and it's telling you here, guys, that it's 348.91, which is 222.77% under fair value. So if something's 222.77% under fair value, that's a strong thing, right? Then when we go into the Altman Z-score, what's that telling us? High risk of bankruptcy. So yeah, absolutely brilliant. 222.77%, but you look down here, it's got a high risk of bankruptcy. That makes you not interested, guys. So bringing these fundamentals and the technicals into one place is a strong thing, because you could just look at that and you could think, if that was just your one piece of analysis, I'm buying that as 222%. It's going to gain at least 222.77% and then more. It's not, guys. High risk of bankruptcy. It could go to zero. So that's one thing that you need to look out for. Now we can look at the politicians. What do the politicians do on Global Payments Inc? Go down here and you can see that Michael McCall, he's a Republican from Texas. He is selling. So he's selling between 15,000 and 50,000. Then you've got Ro Khanna, Democrat. He's just bought some. He's confident in it. You can see the Republicans are selling. Democrats are buying. Look at this. There's a few Democrats selling there. But you look at this and overall you see, right, okay, the politicians, what are they doing? Are they buying? Are they selling? And then you look and you think behind that, why are they buying? Why are they selling? How much are they buying? How much are they selling? Do they know something that we don't know, guys? Because at the end of the day, if the politicians are buying into a company, they don't just randomly look at companies like we do. They don't go onto places like this and randomly look at things. They know exactly something in the background why they should be buying or why they should be selling. So think about that, guys. All of these tools all in one place. You bring the AI agent in, you can see buy or sell. It's got all the details here. Buy or sell. And then obviously the Altman Z-score, that's a safe zone against a bankruptcy risk. So we don't want something that's high risk of bankruptcy. That's what I'm saying, guys. And that's just a little demonstration of the Forecaster app. We're going to be going more into detail. I'm going to be bringing this into my analysis. It does do crypto as well. But you got to remember one thing with the crypto market, guys. All of these new altcoins haven't got much data. When you haven't got much data, then you can't with confluence, or you can't with confidence, should I say, be able to get the right amount of data from there. As an example, you've got an altcoin. If you've got an altcoin that launched in 2017, the altcoin that launched in 2017 would have so much volatility when it was launched and then such a big pullback when it was launched. During its second cycle, it'd cool off ultimately, and then the next cycle it'd cool off ultimately. So what it's going to do with the seasonality is it's going to give it a low correlation, because it's going to run hard one year, it's going to run differently the next year, then it's going to run differently the next year. So with crypto, when you've got Ethereum, it works well. When you've got Bitcoin, it works well. Solana to a certain extent, Cardano with a certain extent. And I'm going to be diving a lot further into the crypto market as well, guys. But I want to be forward thinking. I want you to let me know in the comments as well, while we're at it, what do you think is going to be high in supply, high in demand, and low in supply within the next 9 to 12 months? I know natural gas has pulled back quite nicely, and that's something I'm going to start investing in. However, what else is it that you think is going to be scarce in the next 9 to 12 months? Let me know in the comments, guys, because I can learn from you. I always say that I can learn something from every one of you. So let's do it together as a community. By the way, Forecaster 10% discount if you think this is useful. If you want to just watch me demonstrate it for a while, because there's a lot of data in here, guys, and there's a lot of data that you can get from this, then just hold off for a little while, watch me do it, and then once you can learn how to do it yourself, then maybe look at getting a package. But completely up to you. This is just one of the tools that I'm going to be using. Right, okay, take care of yourself, guys. Goodbye from me.